Hi, everyone, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into a topic that's been getting a lot of attention lately: commodity supercycles. Now, this is one of those concepts that sounds complex at first, but once you break it down, it becomes incredibly useful for understanding how global markets really move over the long term. So, the big question we're exploring today is simple: are we in a commodity supercycle right now? And just as importantly, what does that mean for you as a trader or investor? Let's start from the ground up. First, what exactly is a commodity supercycle? A commodity supercycle is a long period, usually somewhere between 10 and 25 years, where the prices of commodities like oil, copper, gold, wheat, and other raw materials stay above their long-term historical trend. This isn't just a short-term rally or a spike caused by a temporary event. It's a structural shift. Something bigger is happening underneath the surface of the global economy. In a normal cycle, commodity prices might rise for a year or two, then fall back again. That's typical. But in a supercycle, prices trend higher for years, sometimes decades, because demand is consistently outpacing supply. And that's really the key idea here. Supercycles are driven by deep, long-lasting imbalances between supply and demand. So what creates those imbalances? Well, it usually comes down to major structural changes in the global economy. Think about things like rapid industrialization, population growth, urban expansion, or even technological transformation. These are not short-term events. They reshape how the world consumes resources. At the same time, the supply side of commodities is slow to respond. And this is something a lot of people underestimate. If demand for something like copper suddenly increases, you can't just flip a switch and produce more of it. It can take anywhere from 7 to 10 years to develop a new mining project. Oil infrastructure takes years to build. Agricultural production depends on land, weather, and seasonal cycles. So what happens is this: demand moves quickly, but supply moves slowly. And that gap between the two is what drives long-term commodity trends. Let's dig a bit deeper into those long-term trends because understanding them is crucial if you want to make sense of supercycles. At the core, commodities are physical assets. They require real-world investment, infrastructure, and time. There are four main forces that tend to shape long-term commodity trends. The first is sustained demand shocks. When a large economy starts to industrialize or adopt new technologies, it creates demand that lasts for years, not months. This is not a one-off increase. It's a continuous pull on resources. The second is supply rigidity. As we mentioned earlier, supply cannot adjust quickly. There are environmental regulations, capital requirements, and logistical challenges that all slow things down. The third is the capital cycle. When commodity prices fall, companies cut back on investment. They stop exploring, they delay projects, and they reduce spending. Then, years later, when demand comes back, there isn't enough supply to meet it. And the fourth is currency and inflation dynamics. Commodities are typically priced in US dollars, so when the dollar weakens or inflation rises, commodity prices often move higher. All of these forces combine to create trends that can last much longer than most people expect. Now, to really understand where we might be today, it helps to look at history. There have been a few clear commodity supercycles over the past century. In the early 1900s, you had industrial expansion in the United States and Europe. That drove demand for steel, coal, and other materials. Then in the 1970s, you had the energy crisis. Oil prices surged due to geopolitical tensions and supply disruptions, and this was combined with high inflation globally. And more recently, from around 2000 to 2011, you had the China-driven supercycle. This one is especially important. China's rapid urbanization and infrastructure boom created massive demand for commodities. Steel, copper, energy, everything was in high demand. Prices rose across the board for more than a decade. And again, the common theme across all of these periods is that demand increased dramatically and supply simply couldn't keep up. So now we come back to the present. Are we in a commodity supercycle right now? The honest answer is that we don't know for sure yet. but there are some very strong signals that suggest we might be in the early stages of one. Let's go through the main arguments. First, the global energy transition. This is one of the biggest structural shifts happening today. Moving from fossil fuels to renewable energy requires an enormous amount of raw materials. Electric vehicles need much more copper than traditional cars. Batteries require lithium, nickel, and other metals. Wind turbines and solar panels require large amounts of resources to build and maintain. So, even though we're moving toward cleaner energy, we're actually increasing demand for certain commodities in a big way. Second, infrastructure and artificial intelligence. AI might seem like a digital trend, but it has a very physical foundation. Data centers, power grids, and semiconductor manufacturing all rely on commodities. As demand for AI grows, so does the demand for the infrastructure that supports it. Third, supply constraints due to underinvestment. After the commodity downturn in the 2010s, many companies reduced spending. They cut back on exploration and delayed new projects. Now we're seeing the effects of that. Demand is picking up, but supply hasn't caught up yet. And even if companies start investing heavily today, it could take years before that new supply reaches the market. Fourth, geopolitics. The global landscape is changing. Countries are becoming more focused on securing their own resources. Supply chains are being reshaped, and access to key materials is becoming more strategic. This adds another layer of complexity and can further tighten supply. But, and this is important, we also need to look at the other side of the argument. Not everyone believes we're in a super cycle. Some analysts argue that recent price increases are simply a rebound from pandemic-related disruptions. Others point out that global economic growth could slow, which would reduce demand for commodities. There's also the possibility that technological improvements could make resource use more efficient, or that alternative materials could replace scarce ones. And historically, true supercycles are rare. Not every commodity boom turns into a long-term trend. So how do we evaluate what's really happening? There are a few key indicators to watch. First, are we seeing sustained price increases across multiple commodities, not just one or two? Second, are companies increasing capital expenditure in mining and energy? Third, are supply shortages persisting even as prices rise? And fourth, are there long-term policy shifts supporting demand, like government investment in renewable energy? If these trends continue over several years, then the case for a supercycle becomes much stronger. Now let's talk about what this means for you as a trader or investor. If we are entering a commodity supercycle, it changes the market environment in a few important ways. Commodities can become a core asset class rather than something on the sidelines. They often outperform traditional assets like stocks and bonds during these periods. Inflation can remain elevated because rising commodity prices feed directly into the cost of goods and services. There's also a shift in sector leadership. Industries like energy, mining, and agriculture tend to perform well, while others may struggle with higher input costs. And finally, volatility tends to increase. Commodity markets can react quickly to supply disruptions, geopolitical events, and policy changes. So, how do you approach this as a trader? The first step is having the right tools and access to markets. If you're serious about trading long-term trends like commodity cycles, you need a platform that's reliable and built for modern markets. You can check out this world-class, cutting-edge, user-friendly trading platform here at crystalbellmarkets.com/platform. It gives you access to a wide range of global markets and is designed to help traders navigate macro trends like commodities, indices, and more. Definitely worth exploring if you want to take this seriously. And just as important as tools is education. Commodity markets can feel complicated at first, but they don't have to be. If you want to build your understanding step by step, I recommend checking out this beginner-friendly podcast on trading, investing, macro, and financial markets at rss.com/podcast/crystalbellmarkets. It's a great way to get clear, practical insights that you can actually use. So let's wrap this up. Are we in a commodity supercycle? It's still too early to say with certainty, but many of the conditions that have led to supercycles in the past are starting to appear again. We have strong structural demand, from energy and technology transitions. We have limited supply growth due to years of underinvestment. We have shifting geopolitical dynamics, and we're seeing renewed interest from investors in hard assets. That doesn't guarantee anything, but it does make this a critical period to watch. Because if this really is the beginning of a new commodity supercycle, it won't just affect traders. It will shape inflation, economic growth, and the global economy for years to come. And that's exactly why understanding these long-term commodity trends matters. Thanks for listening to Financial Market Insights for Traders. I'm Sophia, and I'll see you in the next episode.